record this. Okay.
Okay.
Hello, everyone. Welcome to our webinar tonight. We'll give you a second all to get in, and then we're going to get started. My name is Marissa Greco, and I am the founder of Get Divorce Ready. Tonight, we are going to be talking about how you can get prepared for divorce because being unprepared is expensive. So a lot of clients come to Angela and I and Elisa and they say, I don't know where to begin. And they hire the lawyer. And then the divorce lawyer starts telling them, well, you need to fill out a financial affidavit, or you need to get all these documents for me, and you need to look at your pay stubs and your tax returns and your income. And by time that's all said and done, the attorneys now charge them $10,000 to just go collect documents. So part of the reason why we're on here tonight is one, we want to save you money. We're proponents of saving you money. We want to make sure that you are asking for the right things in your divorce and you're ultimately going to get a fair settlement. And lastly, we're going to be talking about some things you've probably never heard of from your lawyers. You have to understand that your divorce lawyers, they understand law, right? But we are CDFAs, Certified Divorce Financial Analysts, financial planners, mortgage lenders. We understand numbers. The lawyers don't. The lawyers are going to try to help you settle, but we are going to be able to help you sort through numbers to really understand, is that a good deal for me? Am I going to be able to live after the fact if I get 50% of his pension and 50% of the 401k? These are things the divorce attorneys don't understand. And this is going to go really fast. We've only got an hour here, so I need you all to take out pen, paper, and get writing down these strategies because they're strategies you probably have not heard of. Now, before I jump in, I'd like to know, where is everyone from? We've got like 150 people live right now. Where is everyone from? If you could put it in the chat, that gives us a good idea of what states we should be talking about.
Oh my
Let
gosh,
us know in the
everybody.
chat where you're from.
Pretty much everywhere. I'm looking like everywhere.
Oh my gosh, going so fast. Massachusetts, Texas, California, Washington State, Pennsylvania, Virginia, New Jersey.
New
Jersey, what up?
Did you see a Texas, Angela? Angela's
Yes,
from
I did.
Texas.
Several, Texas and Austin. I saw
All right, so we've got like every
Arizona.
state in the United States
I'm
here.
pretty sure.
So,
Oh,
Yeah.
we have a Canada and
oh,
Alaska.
okay.
Alaska. I haven't done an Alaska
Arizona.
yet. We've done it Canada, but not Alaska yet. At least I haven't.
So most women, unfortunately, they walk into their attorney's office unprepared. Or if you're not using an attorney, you just walk in unprepared in general. You are going to spend more if you are disorganized. That's what I want you to take away from tonight. If you are disorganized, you are going to spend more and you are not going to get the deal that you want. So all tonight, we are going to teach you how to get organized, what numbers you need to know, what to bring to your attorney so you're not paying them $500 an hour to sort through some documentation. A lot of women leave money on the table because one, they're not organized, and two, you don't know what you don't know. If that's you, put your hand in the comment. Marissa, I don't know what I don't know, and my attorney's not really giving me options, not really walking me through all the options that are available when it comes to keeping the home or getting the pensions or splitting retirements. So if you don't know what you don't know, well, you're here and you will know shortly. And then lastly, many of the women that we work with don't know what actual documents to collect. And that's half the battle. If you can collect the right documents up front, you are going to save yourself time and money. So this is a client we had, and this is called the $40,000 mistake to us. So she came in to her attorney with no documents. She had nothing prepared. She ended up spending 6 hours with her attorney, $500 an hour, just to start gathering basic documentation like your pay stub and your 401k and your W-2 and all these things. The attorney went through the documentation, but missed that he had a 401k that he didn't disclose for 85 grand. The attorney also got the client alimony, but accepted something way below their marital standard of living. When you put all in all together, this is a $40,000 mistake. I can't tell you how many cases Angela and I, and Elisa and Christina, and we're going to introduce her soon, have worked where the attorneys are making mistakes every single day. Angela, I'm sure you can name like 50 mistakes off the top of your head that would have cost your
Yeah.
clients money.
Yeah, all the time.
So that's why we're here to look over your attorney's shoulder and make sure you are getting a fair deal. This is someone else who left $120,000 on the table.
Almost.
Her attorney told her, hey, just split the pension at retirement. You get your 50% of the marital portion, and he'll get his 50%. Well, when we talked to her, we're like, wait a second, why are we going to wait 20 years for you to collect a pension? He could die. He could not be here tomorrow, and you might not get that pension. Why don't we figure out what that pension is worth right now and be bought out of that pension right now so we get the money in our hands? Doesn't that sound a lot better? Getting the money in your hands and actually coming up with a value. These are things that we're looking at, but attorneys are not. And now I want to introduce my team quickly, but you'll see a lot of faces on here, some new. My team has grown quickly. So if you were here 2 years ago on our webinar and you're still here, you will probably have seen there's a lot of new faces. So again, I'm Marissa Greco. Elisa, go ahead. My twin.
I'm Marissa's sister, if you couldn't tell. Everyone says we're twins, but we are not. I'm also a CDFA. I've been in the financial divorce space for the last 5 years, and I'm started the company with Marissa basically from the bones. So we're here to help, and I'm excited to talk to you all tonight.
Angela, our mom.
I'm Angela. I am not their mom. However, everyone thinks I am. But I am, yeah, I'm like the mom figure. But I've been a mortgage loan officer for 22 years. I got in the divorce space about 6 years ago and then got my CDFA 4 years ago. So it's been great learning all of the combined, the financial analysis with all the other pieces, and just love helping all of our clients.
And then we've got Christina, who's somewhat new to the team. Christina, go ahead.
Hi, my name is Christina. I'm from Scottsdale, Arizona, but of course work all over the US. I saw somebody who was mentioning retirement. I'm wrapping up the Certified Quadro Specialist designation, so I'm a CDFA. I like the complexity and the math. So if you need help with untangling separate versus community property in a retirement plan, love to help you there. All of these ladies are super wonderful, and we're so grateful that you're here tonight, and we'd love to be the experts in your corner.
Lindsay.
Hi, everyone. I'm Lindsay. I'm in Jersey along with Marissa and Elisa. I'm the graphics and admin person here, so most of you know me over email, most likely. And then tonight, if you have any questions, be sure to put them in the Q&A box so we can get to them at the end.
Rayleigh.
Hi everyone, I'm Rayleigh. I'm originally from Texas, but currently living in Georgia, and you might see me on some emails. I'm Angela's assistant, so I just help run support on the back end and help you guys on that side.
Thanks. So as you can see, we've got a team of people here ready to help you. So now let's dig into the actual information. This is where if you have pen and paper, definitely take it out. And start writing down some notes, and Elisa's gonna jump in with how we can start getting prepared.
So the biggest thing, guys, is walking into your attorney's office with all of the information. Like Marissa said, you don't want to spend your money with the attorney gathering that information. So before you meet with your attorney, you are going to want to gather all of the financial information. That's tax returns, bank statement, credit card statements, mortgage statements, retirement balances, all the things. You want to collect them and have them organized, and that will cut down the cost with your attorney. You will also want to secure access to cash because just in case for emergency purposes, you will need cash on hand and also to pay your experts like your attorney or us. You want to know your budget ahead of time. So you want to track all of your expenses going out, all of the income coming in. This is good to know because when you sit down with your attorney, she's going to require you to fill out a financial affidavit. In order to do so, you need to know these things and you will pay her less if you know them beforehand. You will want to collect your assets and your liabilities. You will want to have a general idea of everything you own and then everything you owe. And then also income, which we touched on a little bit already, but you will want to have your W-2s, your 1099, your tax returns. Now, it's okay if you don't have access to all of these things up front, but you want to gather as much as you can because it will help you save time and cut down costs with your lawyer.
Yeah, and a main question we get is, well, Marissa, how many years of statements do I need? And the reality is the more the better, to be honest, especially if you're working with experts. But most likely, you're going to need about 3 to 5 years. You want 3 to 5 years of tax returns, 3 to 5 years of bank statements, 3 to 5 years of credit cards. Obviously, when all said and done, a lot of our clients are sending in a file that's 2,000 pages long. That's how lengthy all this documentation can be. So the earlier you start collecting it, the better.
And so these are the documents that you should and look to collect before you go see your attorney. Like we said, at least 3 years of tax returns, all of your pay information, W-2s, 1099s, business income, any stock you're receiving, statements for your brokerage accounts, your retirement accounts, crypto, credit cards, and also any bank accounts in your or your spouse's name. The more you know, the better off you will be and the more money you will save when it comes to preparing these documents with your attorney. Also, you would like to know what the value of your home is, any car values, business valuations, and if you don't know this information, once again, that is okay, but you just want to wrap your head around these things before you sit down and spend the money.
Yeah, and that's a good point, Elisa. So if you don't know what you owe and what you own, what do you do? Well, one, you could try to ask your spouse, hey, where are all our assets and liabilities located, right? Two, if you're not on good terms, then you might need to get a lawyer involved and you're going to go through something called discovery. And this is where you're going to ask for documentation. So you're going to ask your spouse to hand over all their documentation and you're going to have to hand over all your documentation. And this is what you're preparing for, that point when you have to swap over documentation. Now, spouses are not cooperative and you're dating someone who is highly contentious. They might not give over the documentation. And then we need to come up with alternate strategies. Some of those strategies can be subpoenaing the institutions to get the documents or putting in a motion to compel to get your spouse in trouble with the court. There's many different solutions, but know that if you don't have access to any of this, that is okay. But if you do, you should be downloading and taking pictures like crazy.
Yeah.
And so knowing your budget also changes everything. You need to know what you are spending monthly. It is so important. Why this is important is for spousal support and alimony for states that have that. Your documented budget provides the court and your attorney an idea of what you are spending and what your shortage is after your income coming in if you have income. So it's so important for your alimony argument to know your budget and have it be an accurate budget of what you are realistically spending and what you will be spending post-divorce as well, because a lot of our clients do not consider things that your spouse may be paying for currently, but obviously won't be paying for after the divorce is finalized. So these are things that you need to consider in your budget and you should add in, like your housing costs, utilities, food and household expenses, transportation and auto, healthcare, life insurance premiums, retirement savings, children expenses, and then don't forget about your personal care and clothing. The biggest one that we see that people do not budget for is vacation, donations, and gifting. Everyone undercuts their budget so much in these sections, so just make sure you are really looking into these sections and putting a thoughtful budget together that's realistic, but still will show that you need the spousal support that you want to ask for.
Right. I just want to jump in here and say this is not the time you want to you're not trying to pressure CPA or your dad. In my case, my dad is the CPA, but this is not, you're trying not to be impressive. You don't want to look budgety at this point. You just want to be realistic. You don't want to be crazy and say things that aren't true, But at the same time, you don't want to put gifts are $25 a month. Let's think big picture. You've got Christmas, you've got Mother's Day, Father's Day, your kids' birthdays, kids' birthday parties, all these things. You want to take what you think you might spend over a year, divide by 12. That's the number you're going to put in. Don't try and look good like, oh, I don't get my hair done. I don't get my nails done. I don't get, if you don't put that. But if you do, put that. We're not trying to impress anybody. We want a realistic vision of what your lifestyle is because that's what you are asking for in support.
I also
Exactly.
I want to point out as well is that if you don't know what you're spending, a lot of women aren't paying the bills and don't have access to this information. You can always Google what is the average cost of something in your
Hmm.
area and
True.
budget for it so it's at least considered.
Mm-hmm.
Yeah. And we also run reports for our clients. They're called marital standard of living reports. But basically, we take all your credit cards, we take all your bank statements, we come up with how much was on average spent monthly, and we give that to the attorneys so that they have all the backup of like, hey, they were spending 30 grand a month. So she needs to continue to get to be able to spend half of that ongoing, 15, right? And that helps give you backup to why you deserve a certain amount of alimony based off your needs. And speaking of alimony, I know this is a hot topic. Unfortunately, I feel like more and more states are kind of cracking down on this, and you really need to be able to support your case with math if you want to get alimony. And Lise, why don't you go over what the lawyers are looking for when it comes to alimony?
So this is generic, so it should be for most states. Some states lean into certain points more than others, but the first would be the marital standard of living. So like Marissa was saying, is they want to see what you were realistically spending monthly, annually throughout the time of your marriage, closest to separation date. Normally they analyze 1 to 3 years for that. Just to see what you were spending because that is a baseline. That is, they don't want your marital standard of living to drop too low. That is what a court and a judge is going to be looking at. So that's one. Two would be the income disparity between the both of you. So they are going to look at both of your incomes coming in. What is the gap between those numbers and what is the combined percentage income that both of you are making to come up with a reasonable support number. A huge factor is going to be duration of marriage. Some states don't even offer alimony if you're married under a certain amount of years. And then also, in some states, you can still get permanent alimony if you are married for over a certain amount of years. Most of them is around 20 to 25 and up for the years. But so that is a huge factor is going to be your duration of marriage, which is going to affect your alimony support and how long it will last. Last would be your earning capacity. So for the last 20 years, were you a stay-at-home mom and you don't have an education that would apply to a job in current day world, or would you have to go back to school to get more of an education to get a job? These are all things that are considered when the courts or attorneys are looking at mediation, at alimony numbers.
Mm-hmm.
And then lastly is that budget. It's so important to show a budget of what you are spending. We work with our clients because we want our clients to most of the time show a shortage, and that will support what we are going to have them ask for in alimony. If you do not show the shortage that's going to back up your request, then the court will never award you your request if you don't need it.
Right.
And some questions just on alimony we'll answer real quick. Yes, California, we got one of our clients permanent alimony in California, and actually it was a really high net worth case. So even if there is a lot of income coming in potentially, you still can get alimony. New York, yes, you can get alimony. The main state is actually Angela's, which is really challenging, Texas.
Yeah,
But
the
we have
worst part. Don't get divorced in Texas.
yeah.
And I did, so I can really speak to it.
Yeah, so Angela, maybe you want to fill them in quickly there for anyone in Texas.
I would just say in Texas, don't ever say the word alimony. It is a bad word in Texas. I don't know why you have to say spousal support or spousal maintenance. But
Mm-hmm.
really what you're going to be looking for is a disproportionate share of the estate. I have a ton of clients in Texas, a lot of them that were stay-home moms for 20 plus years, don't have careers. Rather than the courts, for whatever reason, awarding them spousal support, they will award them maybe 60% of the estate instead of 40%. So it's very common. I mean, it's very similar to getting a lump sum alimony. You're getting more of the asset. It's fine. You invest it and you can, that's,
Mm-hmm.
we help you work through. But yeah, it's just for whatever reason, alimony is just a word in Texas that no one uses.
A lot of people are asking, can we require life insurance to ensure the alimony? Yes, we're going to get
Right,
into that strategy,
for sure.
but you have to understand that life insurance guarantee or can guarantee your alimony and child support payments, right? So if you start collecting alimony today and your spouse dies tomorrow, guess what? No alimony, no child support. So what do? We get insurance on your spouse. So if he were to die, there's a payment to you so that you can keep collecting your alimony and your child support. A lot of attorneys don't know about this strategy, but you absolutely should be advocating for that. A lot of people I'm seeing, if I'm disabled or I have some kind of medical issue, what happens with alimony? Well, alimony is going to be considered even more prevalent in that case because there is a true need for it, right? If you can't work, you have a true need for the alimony.
Right. I'll say one more thing on alimony, just real quick, is we've kind of said this, but at the end of the day, it really comes down to one person's need and the other person's ability to pay. So if you can establish your need, which is what we really help you with, by showing your budget, by making sure your numbers look right. We go through them with you and go, really, $25 a month for gifts? We help you figure out what you might be missing because we want to establish your need. That's going to set the stage for what you can get. We can't really control his ability to pay, but as long as we can establish the need, we're halfway there.
Yeah, and how can you ensure that you get the life insurance? You make the payments
Mhm.
or you become an irrevocable beneficiary so that your spouse cannot take you off. That's a good question. Someone also asked, oh, this is a really good question. This has been coming up. If you're receiving support during the divorce process, it is possible that they're going to subtract those number of years you've been collecting during the divorce process from the total alimony. So yeah, that is something to be aware of.
Yeah.
And then child support. So child support, you're typically there's going to be a state kind of calculator, a guideline that you are going to use. Alimony is a little different. You have to understand with alimony, there's no direct calculations in a lot of states, which is why if you get CDFAs on your team, they can help you negotiate more alimony because if they put numbers behind it, it is going to be more convincing to a judge or to a lawyer of why you deserve a certain amount of alimony. But child support's a little different. There's calculators involved with child support. What do you want to know about child support? Well, child support, again, comes down to income difference. It doesn't matter if the kids are with you 100% or the kids are with him 100%. I mean, it matters a little, but mostly it comes down to income difference. If you have a large income difference, you should be able to receive child support. Can I get life insurance on my husband once he becomes my ex-husband? Yes, you can. That can be in the decree. A lot of times I'll put it in the
Mhm.
decree, like you can go buy a policy on him.
They typically court order it that he has to agree to be the insured. In a lot of cases with that, you may have to pay the premium, but that's honestly better if you own the policy and pay the premium because he can't cancel it.
Exactly.
Um,
So with child support, one thing you really want to do is note down what are all the children's expenses, right? So health insurance, child's care, sports, activities, all the things. So when we help our clients with their budget, we're also looking at the child expenses to say how much is going to be needed in child support. If you come up with the expenses, in some states, this can help you get a higher amount of child support than what's just in the calculator.
true.
So we've talked about income a lot, alimony and child support. Now let's talk about asset division. So what do you need to know when it comes up to splitting your assets? Well, one of the main things is a lot of women we talk to, they want the family home, right? They're tied to the family home. Your kids are there. You don't want to move them out. Makes sense that you would want the family home. But a lot of women don't have like 300 grand cash to go pay off their spouse. So what do? We find ways to trade the family home for something else. And we call that an offset strategy. And we're going to go through that further, where you keep the family home and you can buy out your spouse with other assets. A lot of women also don't understand that taking 200,000 in a retirement account is not the same as taking 200,000 in a house or cash. These are taxed completely differently. 200,000 in a 401k, every dollar is taxed in the future. $200,000 in cash, not going to be taxed. So where are you going to have more money? In the cash. So a deal can look fair on paper at a 50-50 split, but after tax, it could be really unfair. And this is why you want to analyze what is the tax impact on all the assets in your case. We're going to get more into buyout options. Our Angela Family Home Wizard is going to be going through those. And then lastly, this happens way too much. Every attorney comes to us and they're like, let's just split every asset 50-50. And there's like 50 assets. And I'm like, okay, Mr. Attorney, are you going to fill out the hundreds of paperwork that need to be filled out to split these assets? And then are you going to go after the spouse when he doesn't comply and hand over the statements or fill out the paperwork and do what's necessary for you to get the money? And then are you going to pay me for the amount of time it takes to get that money? Because it can be a 6-8 month year process to get the money in your name. So should we split every account 50-50? Absolutely not. We want to split the least amount of accounts. We want to avoid a certain accounts altogether, potentially. And we want to split the least amount of accounts so that you get your money and you move on. This is what I was kind of going over before, but it's a great chart to show you that every kind of asset has a different tax rate. Savings, you're not going to be taxed. 401k, you're going to be taxed anywhere from 22 to 32% potentially. Roth IRA, you're not going to be taxed. Deferred compensation, you might be taxed at 37%. So at the end of the day, you think you're getting an asset that's 200 grand, but it's not. It could be 126 grand, 136 grand after tax. So these are things that Angela and I and Christina and Lisa that we're looking at when we're analyzing what asset should you take. We're considering tax, which your attorney is not going to do. Your attorney is going to say, let's just split the assets and get 50-50. That's good enough. That's not good enough. We need to understand, how is this going to work long term for you? And are you going to be okay financially?
Okay, so I'm jumping in on pensions. So pensions are really, really misunderstood, and it's a huge mistake that a lot of people make when they are looking at a pension. You can look at a pension statement. Let's just say it says 100,000. That pension is not only worth 100,000. You have to get a pension valuation. You have to consider the factors. Look at, does it make sense? Maybe if you're 55 and so you're somewhat close to retirement, does it make sense to wait and take half of the monthly benefit? Maybe. If you're younger than that, if let's say you're mid 40s, do you want to wait 20 years to see if you're going to get half of a monthly pension benefit? He could get hit by a bus. He could get remarried. He could lose his job, disabled. There's so many things that could happen. The best strategy is at that, if you're, on the younger side, is to get a present value evaluation. Figure out what that pension is worth, present value, and then try and offset it with another asset. I will say this, men love their assets. I don't know what it is. They love their assets and their 401ks. Women get focused on the house and the kids. I get it. I'm a mom. I'm divorced. I completely understand that. Men, it's pension 401k. It's my pension. It's my pension. So let that work to your advantage. Okay, your present value of your pension is 200,000. You know what? I'll take 100 more of your 401k that I get right now. I can put it in an IRA with a quadro, make sure tax and all that spec, but then you have it. You don't have to wait 20 years to see what's going to happen to that benefit. So again, that's just a big strategy. Some attorneys, some of the best attorneys I know have looked and go, oh, he has 100K in his pension. Like that's his contributions. That's not what the pension is worth. Pension statements can be confusing because it looks like that's what it's worth. So that's
Hmm.
the thing that we really help with is pensions and figuring out, do you want to wait for the pension? Do you want to do a buyout and help work through that?
And also, a lot of you are asking, like, who do you run pensions? Yes, my team does. We
Yes.
can run pension evaluation. You can also hire a pension evaluator, but my team does has the capability to come up what is the present value of that pension, and we often do, and we try to get our clients bought out now instead of having to wait to 65 and split something 50-50 that may or may not be there by the time they get there. So anytime you can collect a lump sum, go for it. If you can get a lump sum of alimony, go for it. If you can get a buyout from the pension now and a lump sum, go for it because the money's in your hands. And again, we don't know what life brings.
Right.
Should we trust our husband's pension evaluation?
I mean, you can have them get one and then have us run it and check it. That's all.
Yeah.
We still have a second opinion.
And Christina, do you want to jump in and talk about quadros for a second? Because I see a lot of quadro questions coming in, and maybe just give them some guidance on when to use quadros and some thoughts there.
Yes. So a quadro is a qualified domestic relations order, if you haven't heard that term before. It's typically used to divide private sector retirement plans. So you have something called a defined contribution plan, like your 401k, where the present value of that type of account is the account balance that is in there today. Doesn't have the future value isn't as quantifiable because we don't know what it's invested in or and our crystal ball is in the shop. We don't know exactly how the market is going to perform. For defined benefit plans, those would be your pensions. So typically it would have a $0 present value today and then a larger future value because it's going to be calculated at a certain point in time for how long we think this individual is going to live. And then it's a certain benefit, for example, $1,000 a month beginning at age 65. Um, in the public sector, I think I saw someone who was trying to say CSRS. That's if the participant was enrolled in the program before 1984. Most likely it's going to be FERS, which is the Federal Employee Retirement System. And we do have specialized training to be able to help with those retirement for the railroad, military, and just regular governmental.
Yeah, and
Did that
Christine,
help?
you want to touch upon if they need money from a quadro, potentially they can avoid the penalty?
Yes. So I did try to, you guys have so many great questions and they were in the chat and the Q&A. So I was like trying to catch up. Um, it completely depends on the plan administrator. So the Quadro, if it's a 401k, will take the plan participant, which let's say it's your soon-to-be ex-spouse. It will divide and create a separate account just for you, and you'll be known as the alternate payee. So that separate account, you can get distributions from it, and there's typically no penalty because of something called a 72 T2C election. Depending on the administrator, it could be a one-time distribution, or it could be in perpetuity as long as you keep the funds with them in that account. So it's one thing that we would be able to help you guys with. That money has never been taxed before, so you won't have that 10% penalty, but you still need to be aware of where you are in the tax bracket for ordinary income taxes.
Losing health insurance.
Yeah.
So we actually don't have that in our presentation, but you should know that if you are on your spouse's health insurance and you're getting divorced now, you do get something called Cobra, and you get that for 36 months. So that means you can stay on your spouse's insurance with your current coverage. However, your monthly premium is going to go up most
Yeah,
likely
yeah.
dramatically on Cobra. So if you were paying like nothing, now you might be paying like 700, 800, 900,000 a month.
It's always good to
Um,
shop it against like a health insurance broker. We have some recommendations, no
mhm.
one's like on our team, but just different recommendations for different states. It's always good. And honestly, go into the marketplace because a lot of times going into the marketplace can be your best bet across the board. Is this me? Okay. Getting your fair share of the family business. So business evaluations, this is something that people get really wrapped up in, especially when suddenly you're getting a divorce and all of a sudden your spouse's business is not worth anything at all. It's not worth anything. Even though
So
it's supporting your family for years, it's now worth nothing. So these are
Actually, Angela, they had millions of dollars in home, and he's like, I'm losing 50K a year in the business. I'm like, what?
So the one of the biggest things to know is if you're looking at what a business makes, you're not looking at tax returns. That's one of the biggest mistakes people make is you're just looking straight at a tax return and go, well, they wrote all their income off, so the business makes nothing. That's not how it works. You've got to look at cash flow analysis. That is one of the things we do. We're looking at business bank statements. What's actually getting deposited? What are the gross receipts? What are they writing off? Guess what? If you're writing off your family's haircuts and your car and your vacations and your golf trips with your buddies and this and that those are not legitimate business expenses. Are we CPAs? Absolutely not. Are we going to audit the tax return? Also, no. But we can also show these are personal expenses being run
Mhm.
through our business. And when we can prove that, we can add them back into the income. And sometimes they are really not hard to prove that it's
No.
not.
Yeah.
People get really aggressive in the car auto
Uh-huh.
section. It's like $60,000 expense for auto, car, and gas, and you have a Hyundai and you don't get out of the house. So there's a lot of things we can look at and we help you work through of what can be added back in. It's not, you don't ever go off of the tax returns. And a lot of attorneys, even some of the really good attorneys I know, they just calculate off the tax return. You just can't do it that way. And if you have a really profitable business, we're talking about, a high income business, that's the point where you might want to bring in a business evaluator. We are not business evaluators. It's a special certification. But if there's enough, especially in a high net worth or a money that produces a lot of business, it's really important to get a business evaluation, especially if the business was started during the marriage and you may have some ownership percentage. Whether it's on paper or not, just by the fact that it was started during the marriage, you may have some interest in that business. So that's where bringing in a business evaluator might be really important.
Yeah. And another thing we help out with is buyout structure. So I see all the time, attorneys will come to us and be like, yeah, you're definitely going to get a buyout from the business. And I'm like, okay, but where is it going to come from? Right? Because just because you get a valuation that says a business is worth $10 million, okay, how are you actually going to get five? And a
Mhm.
lot of the attorneys don't think through this. It gets to the end, and then you don't get your 5 million because there's no assets. And maybe they pay it over time or they don't pay it at all. So this is why it's really important to strategize with a team, your attorneys and CDFAs, to come up with how am I actually going to get paid out for my spouse's business?
100%. Yeah, and I think all the other things, hidden earnings, all of that is kind of falls under the same umbrella. Okay, so should you keep the family home? This is one of the most loaded questions in any divorce because people get really passionate about the family home. I've been a mortgage loan officer for 22 years. I'm also divorced and had a family home in my divorce. So I have a personal and professional intake on this. But what I'll say is you typically the biggest asset in a divorce, it's also the biggest liability. So you really have to proceed with caution. And while this is easier said than done, really look at it more as a financial transaction than an emotional transaction. And like I said, I've been through a divorce. I have 3 kids. We had to sell the family home, and it was one of those decisions of like my carpool, my neighbors, it gets really emotional. It is. But at the same time, you have to take a step back and go, can I afford this? Sometimes in this market, um, especially in some states like California, Arizona, Vegas, even Texas, you can't move and downsize and buy the same property and have the same payment. Your payment would still go up, even if you tried to
Mm-hmm.
downsize. So it's always important to look at all the options. I'm a CDLP, which is a certified divorce lending professional. That just means that I work a lot with divorcing couples and figuring out running the scenarios. This is what it looks like if you sell and buy something smaller. This is what it looks like if you keep the house. And so let's talk about that. Can you keep the house? Here's the first thing. Is it assumable? If you are like 99.9% of the people in America and you refinanced or purchased during COVID, you probably have somewhere between a 3 and a 4% interest rate. If there's any way to keep that, the only way you can keep it is if that loan is assumable. Almost every government loan is assumable. Most conventional loans are not, but I would say probably 30% or so are. So it's always worth a phone call. The only person you can call, you don't call another mortgage lender, you don't even call me, you call the person who holds your mortgage, the servicer, and you ask them if it's assumable. They can tell you in this fast whether it's assumable or not. If it's assumable, that's a great thing if you have a low interest rate. But then here's the next step. You have to qualify for it. That means you have to have the credit, the income, the assets. It's just like refinancing. You're just getting to keep the same mortgage. So that's your first call. If it's not assumable, you move right on to refinancing. Refinancing, obviously, nobody wants to. If you've got that 4% interest rate, nobody wants to go to 6, but it is what it is if you want to keep the house. Even if you sell and buy something new, you're still going to be at market interest rates. So looking at that, you want to weigh that out. Do you need a cash out? This is one of the biggest things I preach about, and it's one of the biggest mistakes I see in the divorce world as it is. Attorneys think if you need to buy out your ex, you need to do a cash out refinance. A lot of lenders that I know, some really good lenders, think you need to do a cash out refinance. And here's the deal. If all you need is to buy out your spouse, you don't want any cash for yourself, you're not going to do home improvements or pay off credit cards, you only want to buy them out, you can do a rate term refinance. That's going to have a lower interest rate, it's going to have lower fees, less restrictions across the board. It's a much better transaction. So that is something that, again, a lot of just, if you call up Chase Bank, and I'm not ripping on Chase, but just saying, if you just call a big bank and say, hey, I need to buy my ex spouse out. What kind of loan do I need? They're going to tell you you need a cash out refinance because they just don't know the intricacies of it. So keep that in mind if that is something that you want to do. You want to work through somebody, whether it's me or someone like me, a CDLP, or someone who's extremely experienced with divorce and mortgages. That's who you want to talk to. I'm seeing all this. Can you transfer HELOC? Okay, so that's equity loans, HELOCs. That's a great thing to bring up. So let's say, for example, you can assume your loan. Assuming the loan means you cannot change your loan amount, even a penny. So let's say you owe $200,000 on your mortgage and your house is worth $800,000. So you're going to owe your spouse, I can't do that math, $300,000. So you're going, okay, how am I going to give them $300,000? I can't roll it into my low interest rate, my assumable loan. That's locked in. How could I do it? You could do an equity loan in second lien position. That could be a HELOC, which is a home equity line of credit. That's a variable rate that is tied to the Wall Street Journal rate, prime rate. It's going to go up and down depending on what Fed chairman says at any given minute. Or my preference is a HE loan, which is basically the same thing, except it's a fixed interest rate and amortized over 30 years. So it's a safer, in my mind. I'm more on the conservative side, but it's safer to do it that way, have a fixed rate. You can always pay it off. There's not prepayment penalties, but you can still pull the equity from the house if you are lucky enough to have an assumable loan in the first lien position. So that's a good option to have. Can you afford it? That's the loaded question. So because you
That's
can't,
what attorneys don't care about.
I
I
was gonna
can't tell
say.
you how many attorneys have been like, no, your client should take the house. And I'm like, no, they actually can't afford the house and they're going to have to sell it a year from now. And we've given clients that advice who have gone against our advice and have come back to us in a year and they're like, Marissa, I should have listened to you. I got to sell the house. I can't afford it. So
Right.
you don't want to go down that path because that path costs a lot of money, moving costs, etc. So, we help all our clients figure out what are your mortgage options. You can discuss all those mortgage options with Angela. And then what are your house options? Can you actually afford it? How much alimony do you need to be able to qualify for the mortgage? A lot of people don't know that. And so they ask for alimony of 3,000 when they need 5.
Right. And there's also just and I don't know if this is on another slide, but I'm going to go ahead and talk about it. If you need child support and alimony to qualify for the mortgage, you need to have a history of 3 to 6 months receipt, depending on the mortgage. Temporary support can count in that if you're getting temporary support, but also it needs to continue for 3 years. So I was on a call with a client today. She was like, "Oh, I'm getting 3,000 a month child support. I think I'll be good with that and my other money." And I'm like, "How old are your kids?" 17 and about to turn 18. And so I'm like, I can't use either one. I can't use the child support at all because it's not going to continue for 3 years. So that's something that can really bite people. And again, an experienced loan officer, when you go on Rocket, or again, I'm not dogging Rocket, but they're terrible. If you go on Rocket Mortgage and you do a pre-approval letter and you put in your income and you put child support, $3,000 a month, you are getting $3,000 a month child support. They're going to spit out a pre-approval letter because guess what? It didn't ask you how long you're going to get it or how old your kids are. So the truth is, when you go to qualify for that mortgage, you're not going to qualify because I can't use any of that child support because it's not going to continue for 3 years. So these are all really important things to talk about, not with your attorney who's going to be like, "Yeah, I'm going to write in the decree, you get the house, refinance in 6 months, we're good to go." What if you can't refinance? Then you're against your divorce decree and you're in a lot of trouble. Your attorney knows the numbers. Marissa, is this you or me?
Yeah, I can jump in here. So we've gone through a lot of strategies with the house, with alimony, with child support, splitting the assets. Overall, we want you to understand what your attorney's job is and what our job is. So your attorney job is to draft actual legal documents, right? They can set motions, they can subpoena, they can write up marital settlement agreements. They're going to argue in court if you get to court. They're going to tell you of your rights. They're focused on what can we settle right now? What can you get right now? And obviously they're going to charge you per hour to do so. Actually, I'm really curious. If you guys have attorneys, how much have you already spent with your attorney? I'm not even joking. We have a client right now that has spent over $1 million with her attorney, and that's not made up. Over $1 million with her attorney, and guess what? Nothing has been settled.
Insane.
Are you serious?
5K.
One, there's a whole morality issue with that. But two, how is nothing done? Right?
5,000. Look at these numbers.
Yeah, I'd love to know the numbers because it
They're
really
coming
blows
in.
my mind.
30K, 50K, 7,500.
Over 100.
Over
Oh
100.
my gosh, it's cruel. It is. It's just, you know what? There's no regulations when it comes to how the way attorneys can charge. And obviously, you don't want to go back and sue your attorney because they're an attorney if they're not doing the right things, right? So, unfortunately, it's really not regulated. But at the end of the day, how can you save yourself money? That's what this whole thing is about. Having other experts on your team to look at things in your case that they're very good at and who charge flat fees and not per hour, like our team. So, what we can do is look at all your numbers. So when you walk into your legal team, hey, the numbers are all done. Do your lawyer thing. That's it. And that keeps your cost down.
Yeah.
Also, not gonna lie, having other eyes on your case is a good thing. It keeps the lawyers in check. It's like, Mr. Attorney, Mrs. Attorney, why haven't you got back to my client in 4 months? Why did you charge them 30 grand and nothing is done? Why haven't we done this? Why haven't we done that? So it's good to have checks and balances with your attorney. You have to understand that they get paid per hour. The longer this goes on, the more money they make. Not saying that they're doing this on purpose, because a lot of them aren't, but you have to understand their motivation is sometimes not there. Angela, me, Christina, Lisa, we want you to wrap this thing up. We want to get this thing done. Right? So our motivation is like, get through this in the cheapest, fastest way possible while still getting the best deal.
Yes.
And that's where we come in, analyzing all the numbers, looking at the long-term financial impact, calculating your alimony and child support. And we're really focused on your future, not just now, right? So your attorney might say, you know, is this document legally sound? And we might say, okay, well, what are you going to walk away with after tax? How much money do you need to retire? Are you going to have enough cash flow between Social Security in the future if you're in a gray divorce, Social Security, pensions? Right? Do we need to renegotiate support because you can't qualify that mortgage without it? These are all questions we're asking. Your attorney's not going to ask them. So I'm going to go over quick before we start wrapping things up here. 5 strategies that probably your attorney is not mentioning to you that if you don't take anything else away tonight, write these down because these are very good. 1, negotiating the present value of the pension. We talked about this. You want to get a pension evaluation to understand what is this pension worth right now, and it's probably not what it's worth on that statement. 2, if we can't afford to buy our spouse out, let's offset what we owe them with other assets. I will all day take the house and give my spouse retirement, which he has to pay tax on every dollar in the future. Social Security. This is one that just like blows people's mind. They have no idea about this one.
It really makes men mad too.
It makes men so mad. I don't know why.
I just keep poking the bear. Like,
if you're married for over 10 years, you might be able to collect half of your spouse's Social Security benefit if it's higher than yours.
Correct.
And that's a big one that a lot of people don't know about. So you're married 9 years and 9 months. Guess what? You don't get this.
Right.
Wait, Manisa says, poke that bear.
Yeah. Oh, I love Manisa. Yes, I'm poking the bear. No, with Social Security, there's one thing I want to point out is a lot of people say, like, how do I put that in my decree? I want to make sure that's in there. You don't have to. And I will fight with people online about this. They're like, oh, my attorney wrote that I don't have to pay Social Security. I'm like, you can't. Divorces happen at a state law level across the board. Social Security is a federal administration. It is the Social Security Administration. I don't care if your judge did write in your divorce decree that you can't go Social Security. It's not going to be upheld because state law can't override the Social Security Administration.
Federal.
So you don't have to negotiate or argue Social Security. In fact, I would just zip it on it, knowing that all you have to do is wait until you have to be 62. You have to be divorced at least 2 years. They don't have to be retired. Do not have to be retired, don't have to be collecting. But just wait. I need to bring it up in the divorce and poke that bear. I mean, you can if we want to, but I wouldn't. Just be quiet about it, knowing that in addition to whatever alimony and whatever else you can negotiate, that is something that is going to be, if you qualify, obviously, something down the road that doesn't have anything to do with your divorce.
Yeah. Another thing we haven't talked about much, but stock options, or if you have any spouse, that has employee comp, or they might have deferred compensation, they might have RSUs, ISOs, NSOs, all different kind of stock options. These are very nuanced, very complex, very hard to understand. If this is you need to book a call with us. We've helped lots of women through this. Literally this week, actually, I did a whole report for one of our clients, and she missed 6 of the stock option lots that she was entitled to. So I added those in, which added more money back in. And then we had to work a calculation to figure out what was community property, what was separate property, which, by the way, we do a ton of those reports too. If you have something that you inherited or you had before marriage, definitely contact us. We can help you work what is the separate property on that. But stock options are complex, and you're going to need a second pair of eyes on them.
Yes. Restrict a lot of companies, especially big companies like Amazon and Boeing and Google and a lot of the bigger companies. They're finding more and more ways to pay their employees outside of just a base salary. So you're looking at a lot of like bonus, profit sharing, deferred compensation, restricted stock units, stock options, employee stock purchase programs. There's so many different ways of benefits. And if you don't understand or know, deferred comp doesn't even show up on a W-2. You really have to dig in to find it. I have a client right now whose husband has over $2 million in a deferred comp account because it's been going on for like 6 years. And so that is an asset. It's already been earned. It was earned during the marriage, but had she not known about it, that would be an asset that was left on the table. So again, it's just really important that in this industry or in this age where everyone's moving more and more towards paying in what they call non-cash compensation, It's really important to have someone on your team who knows what that looks like. And most attorneys, some do, most attorneys, they'll tell me, they're like, we're not financial people. We went to law school. And I'm like, well, I'm a financial person. I didn't go to law school. So we all have our lane. We all need each other,
Yeah.
but they shouldn't be the one negotiating your financial settlement.
I want to also add on the stock options for the restricted stock units. They normally follow a vesting schedule. Just because they are not vested does not mean you are not entitled to them.
Correct.
So if they were granted during the marriage, but they are unvested, you can still get your portion.
Yes, same with stock options. Same exact thing. If something is granted during the marriage, even if it's not vested, worth nothing, you still own half of that share. So whenever, or half of that option. So it's really important. Again, one of the biggest ways people leave money on the table.
And we talked about life insurance. If you're getting alimony and child support, you got to negotiate life insurance in the deal so that it's protected. We talked about the 10-year rule with Social Security. So that's important. One thing we might have not touched about is survivor benefits on pensions. Keep in mind, you want to get a pension 20 years from now, but your spouse dies. If you don't have survivor benefits, you might not be entitled to get that pension. So these are all really important points you want to look at when you're going through your settlement.
And I want to, just because I saw 10 plus, I want to mention this. I've seen several questions on here about military pensions.
Yeah, I saw that.
And military benefits, and it is huge. If you are going through a military divorce, you definitely want to reach out to a professional. Attorneys don't understand it. There are so many different things, especially when even analyzing their income, like BAH, which is like a housing allowance. That is considered, you have to consider that when you're calculating alimony and things like that. There's also the 10-10 rule, the 10-20 rule. There's so many different rules that are very different with military pensions than other pensions. Again, attorneys, even some really strong financial people don't understand all of the nuances of military benefits. So all the more reason you need to be working with financial professionals.
Absolutely. So we're getting towards the end. So if you have questions, start putting them in the Q&A or the chat because we like to answer as many questions as possible so that you guys walk away with tons of value. So our team has negotiated at this point over 300 cases somehow. And we're still living, we're still here, and we're still kicking. No, most of our clients are great, and they're actually not the stressful ones. It's their spouse or their attorneys that are bringing on the stress. But that's why we're here, to make this an easier process for you to understand what you deserve, what you're entitled to, and look at the numbers. And I had a client recently, we prepared a whole settlement agreement. She walked into her mediation and she put it on the table. And she said the look on her spouse's face, like he was just dumbfounded that literally she knew every asset, every debt, how to split it, what she wanted. It was, it's just kind of interesting when they don't expect that from you. But that's literally what we prepare, is everything you will need to walk in with your lawyers into a mediation or to give to your spouse. Like, here's what I want and here's why. And how we achieve this is through our consulting package. So we have a Get Divorce Ready team consulting package. Again, I told you, we're not going to charge you per hour. We're not like your lawyer. It's a flat fee. You pay a flat fee. We're on your team your entire divorce. I'm still talking to clients from 2 years ago. So is Angela.
Great. We've got a
3 years. Sorry, 3 years.
Hi,
It's not always so great for us, but good for you. So what are we going to do when we get on your team? Well, we're going to look at all your financial documents. If it's 1,000 pages, we look at 1,000 pages. We're going to come up with a net worth summary. What's everything you owe, everything you own? We're going to look at the after-tax value of things, right? Should you take this asset, or is that really going to be taxed in the future and you shouldn't take that asset? We're going to give you backup why you deserve $5,000 in alimony, why you need $1,300 in child support. We can run pension evaluations. We can look at the business expenses and tax returns. We analyze retirement accounts. Angela, our specialist here, is going to do the home. So you need a mortgage. She's your gal. She's going to figure out how to get you qualified on that mortgage, how to use your alimony and child support to get you qualified. We're going to analyze, should you keep the home? Should you get rid of the home? Can you afford the home? We're going to create settlement proposals for you and models to give to your lawyer to bring to mediation or give to your spouse. And then we also have specialty reports, marital and separate property claims. We have now added to waste claims and dissipation claims. So if you got a spouse who has been cheating and maybe spending a lot of money on another woman, or has been gambling, or maybe has active addictions like alcohol, you might be able to ask for money back if they've been spending your money not wisely. And we help with those claims as well. And again, there's unlimited access to our team once you're on our team.
One thing I'm going to say, I saw somebody's question pop up, their attorney, and I hear attorneys say this a lot. They're like, don't even bother with a waste claim. It's not worth it. That's because the attorneys don't want to dig through your bank statements. They don't
No.
know what they're looking for. They don't want to do the analysis. It's a lot. I will tell you, my biggest to date is like 252, right around $250,000. I can guarantee you she feels like that 125K she got back in being, reimbursed for half of what he wasted was well worth her time
Yeah.
and our flat fee package. So I'm not saying every single waste case is worth it, but if you think, especially if there's an affair partner, a gambling addiction, alcohol addiction, OnlyFans, I mean, you name it, we've seen it. It
Yeah.
surprised me at this point. But if you think, I mean, if it's $5,000, don't waste your time.
600K in gambling, absolutely. You need a
Amen.
marital waste claim.
Yes, gambling is a huge one, and we have reports. We have software that can even pull
All
ATM
the charges.
when it's in a gambling casino, like the ATM. It goes by the address if it's located in a casino. Things like that are
Mhm.
really important. So, yeah, so don't always dismiss it as not relevant, even if your attorney says it's not.
Yeah, and we also we can just look for hidden assets as well. So Lisa and I did a report this week. We found a 250K cash wire that our client had no clue about. And now she's walking into mediation and she's asking for half of that back. So, you don't know again what you don't know. And once you start getting into the weeds, you start seeing things you might have not known about. And sometimes big things you find are not as big as you think. Like you find a 500K transaction, you're like, oh, and it's nothing. And then sometimes you find a smaller transaction you think nothing about, but it was actually a hidden account you had no idea about, right? So this is why you got to keep your eye on the evidence. And cases are won with evidence. The judge, the attorneys, your spouse, they don't care what you feel about. They don't care that you got screwed over. They don't care that you feel slighted. What they care about is what's in the numbers and what is fair. And if you don't have numbers prepared, it is going to be hard to prove what you deserve to get in alimony and child support and in the asset support.
Yes. One thing I want to say real quick on marital and separate property reports, because I see that on here, is that is kind of a situation where, let's say you had a 401K coming into the marriage and you're trying to figure out, an attorney is going to say, get me the statement from the month and year you got married. Let's say it had 20,000 in it. Now the account is worth 100. Do you only get your 20? No, because there was growth on that. So we do separate property growth analysis reports that, again, you can give to the attorney, the mediator, whoever it is, but it's more than just the number that was there. Same thing with the home. If you had the home before marriage, there's different growth patterns of what's community and what's separate. So another reason that it's really important to work with a financial professional on that.
Yep. So you've seen throughout the call that my assistants have been posting some links. If you feel like you might be a good candidate for our package, or you have specific questions you want to get on with my team and ask, we give real immediate advice on our calls. So if you're like, hey, what do you think about this? And should I keep the house? And do you think I'm entitled to alimony? We'll give you those real tangible pieces of information on our call together. But more than that, you can see if we're a good fit to potentially join your team. and help you throughout this divorce process. That call right now is discounted. It's 150 to the public. Right now it's 125. That gets you on a call with me and my team, and we can answer any questions you have, go through your situation, and also see if it might be good for us to work together going forward and see if we can provide helping you with your settlement deal and bring more money back on the table. We have some time right now to do some Q&A. Angela and I love the Q&A, and Christina, Lisa, everyone feel jump right in. So if you've got your questions, throw them in right now. You'll get answers right now. Again, book a call. And we will also put that call, by the way, if you buy our consulting package, which is a flat fee for $5,000, or there is a payment plan for 4 months. So we want to keep it affordable, which is why we offer a payment plan to cut that payment down per month so that you guys can get us on your team. And once we're on your team, we're on your team. Again, we're not charging you per hour. We're not charging you 500 for every email. We're on your team. You need us, we're there. We're helping you prepare everything you need. So if you are interested in that, definitely book a call. Again, it's discounted tonight and it will go towards your consulting package if you end up purchasing the consulting package. All right, should we start the Q&A?
Go. Where's the Q&As? Oh, wait, hang on. I'm in the wrong screen. Sorry.
Ooh, 63 questions.
There's
Holy moly.
63? Oh no.
Yes.
Okay, hang on. Oh, wait, I don't want to record.
Can I
Just
answer
you gotta
one?
click on it and it comes
Yes,
up.
go. Jump in,
Yeah,
somebody.
Christina, you can answer one.
Go
Just say
ahead.
what the question is.
Angela can't figure out how to make them show up.
Okay, so I see Lizette. She just said, what is a CDFA? So CDFA stands for Certified Divorce Financial Analyst. The A word is pretty important because sometimes people will ask me, what's the difference between a financial advisor and a financial analyst? So during your divorce, we help to organize and analyze all of the financial components, just like you were hearing throughout this presentation tonight. We work alongside your legal professionals. As Angela said, we know how to kind of stay in our lane and help with the whole process. We're also able to help with preparing exhibits for your case, with financial education. So that way, when you go to mediation, if you're a candidate for that, and they ask, what's your request for alimony? You can confidently say a number. You have a better understanding of the assets that are to be divided, liabilities as well. And so, yes, that is a CDFA.
Perfect. Okay, I'm seeing several. I'm going to jump on this one because I see like 4 in a row talking about gray
Divorce.
So I'm going to say, first of all, this has nothing to do with your color of your hair, and I'm offended by it because I'm 100% in gray divorce territory.
I found my first gray hair, Angela.
Shit.
I know, it's the worst day ever so
You know what?
far.
Hair dye. Let's just go. No, but so gray divorce does reference basically it's around 50 and up, but really it doesn't have as much to do with the age or hair color as it does the stage of life you're in. We're really talking about people who typically have adult children or kids in college. They're usually out of the house. You're usually not talking about child support and parenting plans and custody schedules. You're talking more about big picture things, and usually there's a lot more assets to divide up. You've got retirement built up, you've got family homes, maybe rental properties, things like that. So that's why it's so impactful. And for a lot of our clients, a lot of our gray divorce clients, they haven't worked in 20 plus years. They've been stay-home moms, or maybe they've worked part-time. Maybe they've dabbled in some side businesses, but they don't have a lucrative career that is supporting them. And so that's why it's so terrifying and why they need our guidance in how do I get my fair share, number one, and then also how do I set myself up for success going forward. And Marissa's really helpful with that piece of it in terms of like retirement planning and stuff like that. Because honestly, when I started working with Marissa, I'm almost 55. I didn't really, I mean, I have retirement, but I really know strategically how it was planned out. So that's really important. And so the older you are, the more important it is to have that kind of guidance.
Correct. Jody, you don't need to have an attorney to work with us. Like we actually talk to a lot of spouses, and we help put agreements together just for you to go talk to your spouse or your spouse to get on with us. So no, you don't need an attorney.
Mhm. Um, what if he old vehicles? I'm
Can we
looking.
go to mediation with you? Yes, and we can be an expert witness in
Yes.
your if you're at court. How long does the process take? We are quick. You get our documents to us usually within a week to 2 weeks. We've analyzed everything and we're on our first call together.
Yes. I see a lot about college, child support, all of that. So while we don't do parenting plans, we can definitely tell you all the things you need to be looking out for, especially myself, personal, experience, things like cars and car insurance. And I had 3 kids in 5 years. That car insurance when I had a 20-year-old, an 18-year-old, and a 16-year-old was terrifying. It was more than a house payment. So I didn't have anything in my decree. So it is what it is. But we help educate you. Like, don't forget to ask about this. Don't forget to ask about college or cars or even down to phones and devices, because everybody, in school now, they need devices and things like that. So we help you think of those things. We can't really control it, but we can definitely help you make sure you don't leave money on the table in that regard.
I saw a question about when is it appropriate to hire a CDFA before mediation? Does it matter when you hire us? Honestly, we would prefer you hire us as early as possible because that gives us all the time in the world to prepare you, and
Right.
that's going to cut down your costs. Everything we talked about on this webinar is supposed to save you money. So, I would recommend hiring us before you hire your attorney.
I want to jump on this one. Somebody said we have a VA loan. It's assumable. They tell me I don't even have to reapply. He can just put it in my name. That is true. One thing I really want to warn everybody on is if your spouse is the veteran, their entitlement is tied to that home. So even though you can just assume the loan, it does not release their entitlement. So that's a again, that's a big, broad topic. Definitely call us for advice on that, but it's not as easy, sadly, as just assuming it because their entitlement is still tied to the property.
Yes, you can work earnings on separate marital property, Caroline. We can help you with that.
Yeah, your mortgage rate is 2.75. You can't give that up. I get it. Unfortunately, if your loan is not assumable, if it's not assumable, and your spouse is not willing to stay on. I will say that in this age of people having these really low interest rates, sometimes it's a negotiation tactic. I'll see people say, hey, especially some of my moms will say, I'm willing to stay on it, but I want this in exchange, because let's calculate what interest they're saving if somebody's willing to stay on. One really important thing I want to bring up that a lot of people don't understand is that if you are willing to stay on the mortgage, or your spouse is willing to stay on the mortgage of a low interest rate, it does not keep them from buying another property. If a court order, a divorce decree, says that the home and mortgage are awarded to the person keeping the home, the person who's exiting the home, even if they're still on the mortgage, that can be excluded from their debt to income ratio. And a lot of even mortgage lenders don't necessarily know that. So if your, spouse, if you're wanting to keep the home and your spouse is saying, I can't stay on the mortgage because I want to go buy a house, don't let that be a stopping point. Talk to us, because it is not a stopping point.
It's not too late to hire us if you've got mediation soon. I think, Angela, someone's hired us, I think, the day before
Yes,
mediation.
they did one time. It was a Friday and the mediation was on a Monday. And we're like, oh,
Yeah, and so we just prepped all weekend, basically
mhm.
got it ready and got it good to go. It's never too late, you
No,
know.
no. What you don't want to do ever is walk into mediation without a plan, without your assets, without knowing what you want to ask for, because mediators, judges, they tell us, they're like, we're not financial people. We want to see people come in with, this is what I want, here's why, and here's the backup. Like, I want the family home. I can afford it. Here's my conditional approval letter that shows I'm approved to refinance the mortgage into my name. Here's how I'm
Mhm.
going to buy him or her out. Here's the other division of assets, and here's all the backup behind it with expert, reports. They are way more likely to advocate for you than if you're just like, I want the house, and that's all you have to
Mhm.
say. Do you have a
Or
job?
you're just
No.
emotionally charged talking about all the,
Exactly.
they don't care what has happened. That's the
No.
unfortunate part, but they don't care. So, none of that is going to help you. The
Right.
emotional aspect, not going to help you. You need numbers. It's going to come down to numbers.
100%.
Will you lose alimony if your spouse retires? You can. And this is a big point to be thinking about. Like, if they retire, then do we have no income coming in and what are we going to do?
Yep. Um,
There's so many
Student
questions.
loans. I know. I'm like looking through. Um, Monthly analysis, personal loan with a home lien. Oh
Did
gosh.
we do this one yet? Jody said, "What if husband stopped working and bringing in money in his construction company to lower his
Oh,
income?"
we can.
Yeah.
Jody, one, you can hire a vocational evaluator basically to say that he's underworking or taking less jobs or whatever it is, and he should be earning X based on his earning history. That's an option. Also, another option is you can take an average of his salary over the last 3 years and go in with that negotiation strategy instead for spousal support, if the average is higher than what he currently is showing for his current year.
Yes, we can deal with high conflict divorce coaches. We can deal with your attorneys. We can deal with your forensics. We are open to working with anyone on your team.
Right.
And if anyone tells you differently, then they're probably not in a good advocating space for you.
Imputed income, I want to touch on this. I see 21 years married. X wants my wages imputed hourly on a 40-hour work week. Never worked full-time the entire marriage. I'm scared. This is a tactic a lot of attorneys will do. Somebody hasn't worked for 21 years and they're going to impute your income at minimum wage. That's what they're going to do. That really, in most cases, is not going to hurt you much, but it is also something to be prepared for and aware of, especially if you have like degrees, advanced degrees, things like that, to be able to counter that and be like, yeah, okay, I have a nurse's degree from, 1992, but I would have to get this certification, whatever, just to be able to counter that. So don't be scared. Just again, work with someone who can help you kind of navigate that.
Should they get a job if they're going through divorce? That's a tough one. I mean, obviously, if you're young and you're going to need to be working potentially, but if you're older, it could hurt alimony. So it's a case by case basis there.
Right. Um, what if he's hiding assets? So there are a lot of hidden assets. That's one thing that we really help with in finding. There's a lot of different ways to look through money tracing, through looking at tax returns. There's so many different ways. There's not just one way, but hidden assets are key. And one thing I want to say is I have so many of my clients, they'll tell me, they're like, oh my God, he's so smart. Like he's so smart. He's a finance guy, or he's a CPA, or he's just this really smart, witty person. You're never going to be able to find it. He's so smart. And I'm not saying this cocky, but we're smart too. Like we're certified in this. We're trained in this. We took hours and hours and hours of classes in this. So don't
Hmm.
be scared that he's smart. He probably is. And high five to him for being smart, but we are too. And we
But
actually are.
also, he's not trained in like
I was just going to
divorce
say,
strategy, right?
right,
Like
right.
just because you're intelligent means nothing. Doesn't mean you can negotiate a divorce,
Correct.
settlement
Yes.
well, right? So,
Yeah. So
so
don't be
don't be
intimidated.
scared.
Exactly. Don't be intimidated by that. I hear that more often than not. And I always just reassure them, like, listen, we know what we're looking for. Like, probably are smart people, but don't exactly know how they're supposed to hide things. They're not that crafty. So don't be scared.
Hmm. Yes, we run pension valuations. Life insurance, if it's a whole life policy, it would be on the asset sheet if there's cash value. if it's just a term policy, then it's not an asset.
I see somebody saying here, what if they want me to sign a quit claim deed? Do not
Do
ever
not.
sign a quit claim deed unless you are refinanced off the mortgage if you don't want the home. Don't ever sign one. I've seen some attorneys will say sign one as part of the divorce decree. As you sign your final divorce decree, sign your quit claim deed. That's the worst thing you could ever do because you're giving up ownership to the family home before you're released of liability if you're on the mortgage or before the equity is calculated. So the answer to that is a big fat no.
What do you need to schedule a call with us? If you could come with like some numbers in mind, like some of the assets, some of the debt, maybe your budget, maybe your income, that's helpful for us to give you live advice. But if you also don't have any of that information, don't worry. But yes, if you do have specific numbers, schedule the call and bring your numbers to the call because that will help us give you specific advice on that call. And I'm
What-
seeing the calls come in. So our
I
calendar, by the
saw
way, our calendar
somebody,
usually gets really booked from
yeah.
this. Like we usually book between 30 to 50 calls. So if you do want to get in, make sure you get in because the time slots go pretty fast and our calendar books up.
Yes, I know we're almost out of time, but I wanted to point out somebody asked about post-divorce investing guidance and also post-divorce budgeting guidance. That is something that's included in your package, especially in terms of, let's say you're going to get a quadro or you have a quadro and you're going to get half of a 401k. What are you going to do with it? Do you know? Like I said, as I am very financially minded, I feel like I'm a very financially strong person. I didn't know how my 401k was invested, like what bonds and things, because that's not my wheelhouse. I'm a mortgage girl. So it's really important. That is something that we help with. That is included in your flat fee. If you're going to get a large portion of this 401k and it's going to come over, you want it to go into an IRA, or Marissa could say this way better than me, but you want it to be strategic and you want it to be diversified in all the things. That is something included in your package.
Yeah, I mean, I help a lot of our clients open IRAs, open brokerage accounts, open annuities, get the money into your name. Christina, who just joined us as well, now she's going to be providing quadros. So if you need help with a quadro, she can help you with that. So we really are like an all one-stop team in the fact that you're going to get financial help, mortgage help, quadro help, long-term planning help, and then obviously divorce help.
Yes.
A COLA rider, yes, you should do it if you can.
Any way to assume the mortgage if it doesn't allow for it? No. Sadly, no. There's no way to assume a mortgage if your mortgage company that holds your mortgage will not allow it to be assumed. So if that's the case, the only option to get the other party off, if they won't agree to stay on, is to refinance it.
Student loans, we didn't bring up debt. Good point. Student loans are 9 out of 10 times they're separate property.
Yes.
And debt accrued during the marriage is usually split. However, you really don't want to split it.
No. No. Keep your own debt in your own name and offset it with assets. You're way better off keeping any debt that's in your own name, even if it's joint. Keep it. If your name's on it, your Social Security is attached to it, keep it. One of my most infamous stories, which is not a win story in my mind, and I really, really did try and tell her, but I did have a stay-at-home mom. She wanted no debt after the divorce. And so her husband agreed to take all of the debt. She agreed to go along with it. I was like, please keep what's in your name. She didn't. He declared bankruptcy a week after the divorce was final. And so
Mhm.
not only was her credit trashed, the creditors were coming after her. There were judgments, all the things. One very important thing to know on this call, creditors, meaning Visa, MasterCard, Citibank, Costco, they don't recognize divorce decrees. They don't care. Car companies, mortgages, none of them recognize a divorce decree. If your Social Security number is attached to a debt and it isn't paid, they are coming after both of you regardless of what a divorce decree says. So keep what's in your own name so that you can control who pays it.
Do we have smaller packages? No, but we do have something new on our website, where if you need specifically a waste claim or dissipation of assets or potentially a lifestyle analysis to say how much were you spending during your marriage, that is one report we can provide on a one-off, and it is a much smaller package. So that's on our website if you want to check it out. Do you have to schedule a call? No, you can just hire us. If you're ready to go, we're ready to go. You hire us. You immediately get from my team where to start uploading documents. We review it in the next week and we get on a call to start going over everything.
Okay, should we do like maybe two more? I'm gonna
Yeah,
take
do two more and wrap it up.
I'm gonna take this one. My husband incurred over 40,000 in debt. I have no idea about how do I go about offsetting debts with assets. So that's really tricky because again, that 40K in debt that you had no idea about, sucks for lack of a better word. I mean, but unfortunately, it doesn't, the creditors don't care. They're not gonna go, well, she didn't know, so let's forgive her. It's sad. Again, if your name is on it, then take it and then try and either, if it's only pension, that's tricky. You would have to like book a call with us. We can maybe try and help you with that, but just I can't reiterate enough to keep debt that's in your own name because I've seen it backfire on people so much.
We'll reach out to your attorney and get the documents for you. If you can't get them, we work with your experts to make sure we get the documents and can start looking at them.
Yes.
If you guys can't find call times available when you're looking to book, and you need a specific time or you don't see something available or you need an earlier appointment, you can always email us at gdr@getyourdivorceready.com.
Especially if you have like an immediate mediation or something that's happening really time sensitive, we will do everything we can to try and get you in.
Yeah,
Marissa, do
and
you know?
it should show up in your time zone on the call when you're booking.
Okay, that was the question I was going to answer.
Yeah.
Yeah.
So if you're in California, it should be California time when you're booking.
So here, last question. Change your name, put it in your decree, no matter what. Even if you don't want to change your name, put it in your decree because if at any moment you want to, there are nightmare stories about if it's not in your decree and you want to change your name, you have to go to court to change your name, which is the dumbest thing. To even go back to your maiden name, you have to go to court. You have to hire an attorney, pay legal fees to go back to court to change your name. So just put it in there as a blanket, whatever. I'm not a big fan. I still have my married name because it's the name of my kids. But some people want to change theirs. Just put it in there. So on the off chance somebody just really makes you mad, you can go change your name and you don't have to go to court and hire an attorney. So always put it in there.
All right, guys. Well, we hope that was really
Yes.
informational. We hope you pick something up that you can use to get more money back in your divorce or get a fair settlement. We're here from you. Our team's not going anywhere. As we said, we're negotiating currently over 300 cases. We got 4 CDFAs on the team. Angela, our mortgage specialist. I am a certified retirement specialist and financial planner. So between all of us, we can get your questions answered. We work quickly. I like to say that your attorneys might take a while to get things done. We're on it. We're answering emails within 48 hours. We're looking at your documents as soon as you're getting them to us, and we're scheduling that first call. We're on your team for the duration if you do hire us on a consulting basis. If you're not sure if you should hire us on a consulting basis, book the call. Again, it's discounted, $125. Book the call. We can answer your specific questions on that call when it comes to your case. Bring your numbers if you have them to that call so we can get really specific in the advice that we're giving. And yes, we work in every state. So Angela can do mortgages in every state.
Oh,
I
that's a
can
great
open
thing to bring up.
retirement accounts in every state, and we do divorces in every single state. Although I will say our biggest states are Cali, Texas, New York.
Mhm.
What
Uh,
else, Angela, that we see?
We
Arizona,
have
Illinois
a
is like
decent
a
amount of New Jersey
Florida. We
too.
have a lot
New
from Florida.
Jersey, Florida. Yeah,
And
Florida's a
then
Yeah.
big one.
Ohio, but I think that was just my algorithm because my son lived there for a while. So all of a sudden
So all the people in Ohio were
I
going in.
got a lot of, yeah, I think I posted a lot about the Cleveland Browns and all of a sudden I got a lot of Ohio clients. But no, we work in every state. Mortgages, especially, that is key to know that I can do HELOCs, loans, refinances. I can't do assumptions, obviously, because like we talked about, that can only happen through your current mortgage servicer. But anything else mortgage related, we can do in every state.
Yes, and if your spouse owns a business, because I'm seeing a lot of business questions,
Yes.
we have so many clients whose spouses own a business. We know what to look for, we know where to get you, and we're going to try to do it in the least expensive way. Because I saw someone ask, should we hire a forensic accountant and you? I would hire us first because we're going
Yes.
to try to not push you
100%.
there if you don't have to go there. Why go to a forensic accountant and spend 50 grand, 100 grand if you don't have to? Right? In some cases, it might make sense. Others, and for the most part, it will not make sense to spend that much money.
Right. And especially if you do hire, if we do need to bring in a forensic, we have someone that we refer a lot of cases to as a business evaluator or even just a forensic. But regardless of who it is, if we've got a lot of the documents, if we've done an income analysis based on tax returns, if we've got, cash flow analysis based on your business tax return or business bank accounts, those things will just cut out hours that the forensic accountant is going to charge you for because most forensic accountants work on an hourly basis. So it's still a cost savings across the board.
Yep. And we work with forensic accountants, and we complement them pretty well and give them what they need to, again, cut down costs.
Yes.
What is different about what we do compared to a forensic? So we're looking at the overall financial picture, all the assets, all the debts. The forensic's not going to do any of that. All the forensic is going to do is dig into really complex data points. So they're going to like look at all the transactions on your bank account potentially, or look at all the transactions in your tax return and or a business evaluation. And so they're getting into the nitty gritty weeds. We do that too, but we also look a lot more high level to say, ultimately, what are the decisions you should make so that you're set up okay and going to be financially okay after the divorce? Yes,
Right.
we go through transactions and find hidden accounts. We actually have the system that the forensic accountants are using.
Yes. Same software.
So we basically are friends. I mean, we don't have the titling, but we're
Right.
doing what they're doing a lot cheaper. All right, guys. Well, I hope you found that helpful.
Yes.
Again, if you haven't booked your call, do it. It's 125. It's 25 bucks on sale just for people on this webinar. You'll get a lot of tangible advice on that call that you can use whether you want to hire us or not. If you do want to hire us, we'll put the call towards your consulting package. You can book the consulting package right now if you're like, yes, I need you and I need to get started. And you'll immediately get from my team how to start uploading documents and get started on this process. Listen, we started Get Divorce Ready because we've seen way too many women get abused in this process. Either not know what they're entitled to, not get a fair deal, have their attorneys not be transparent with them. And so we're here to help you through this. We're here to make sure you get a fair deal and that you can live financially free after the fact. How long is the call? Half hour.
Yes.
It's on Zoom, so if you're from Canada or somewhere else, no problem. You just get in on Zoom.
Yeah. And if for some reason you don't like Zoom, so every once in a while I'm like, somebody's like, I don't want to be on camera. I'm like, you can ask for a phone call. When you book when you book the call, it asks you, it defaults to Zoom, but if you just would rather have a phone call, you can definitely do that.
Yeah, and we'll send an email out too right away when we get off this. You'll get the replay. So definitely you can go back towards it, and you'll also get the call link and the consulting link to check it out. Thank you guys. Thank
Thanks,
you.
guys.
You've all been
Thank
great.
you, everyone.
Have a great night, everyone.
Bye.
Bye.